Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the casino has a closing time and we're getting close. Let's talk about it.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
So Bob, it seems like the leverage is just getting higher and higher and higher. The concentration in the stock market is getting narrower and narrower. And we've seen this before, haven't we?
Yeah, Phil, I think for people that aren't practicing risk management at this point, you're going to probably lose most of your assets here over the next 2 years. I think it's, we've been using the word unprecedented, but this is like unprecedented. And we're bumping up against so many different sirens of warnings that is scary. And people automatically think, well, if we have inflation, it's going to support stock prices. Well, it only supports stock prices if you're like in a Zimbabwe environment. Otherwise, it's going to collapse prices because the companies aren't going to be able to match the increase in the cost of doing business against the revenue, and revenues are going to fall because the customers aren't going to be able to buy the products. So it becomes a doom loop. But the first thing I want to show you is how they're keeping the casino open right now. They did it again, Phil. They did it again. February into March is usually a pretty rocky month, and they just went ahead and papered over it by just putting down massive amounts of day leverage. Zero TTEs are on the rise again. This is the whole reason why the stock market is maintaining its posture. I should correct myself. It's not the stock market. It's these stocks. The next chart will show you what I'm talking about. The high momentum companies. And so all you have now is really the top 7, and we're driving down to the top 2. NVIDIA and SMCI are really having trouble making new highs from here. And as they start rolling over, I don't think the other guys can support it. And when this goes, it takes down almost every other ETF, Phil, because these guys are embedded into everything. But if you didn't own ETFs, you just own regular stocks, your portfolio probably is pretty flat for this year because equal weighted is flat, zero growth. In fact, we talked about this before. Since 2022, over 60% of the stocks are below the high of 2022. If we haven't already freaked you out with the charts I just shown you, wait till this next chart comes up. This is the fourth turning, the Kondrativ wave collapsing. This is from 1920 actually, to today. This is the rising wedge fill. And all you have to do is draw a parallel line from that top and bisect it on that where it starts on the right, and you're looking at a massive retrenchment in value of stocks. Usually you're talking in these big bears, 40 to 50%. This move, as it unwinds, and it will unwind if the Biden administration and the Fed just keeps doing the games that they're doing and the leverage keeps increasing, we could see 60, 70% drop in stock values. And people say it can't happen. It can easily happen because once you lose control of the leverage and you start having counterparties start to blow up, there's too much risk even for governments to protect you at this point. And you want to say, could the governments do a reset? Well, here's your reset. It's coming and you're going to pay for it.
Yeah, we've seen this show before. So I don't have really much more to add to this other than, kind of like coming to a head. But it can take time, right? It can take time. So we may actually have a pullback in the markets here upon us. Bitcoin's pulled back some, and we still have that bearish engulfing candle on the SPX that came in last week, Friday. You have to negate that by getting a daily close back over it. And we got a rejection off of the economic data this morning with, I think, the PPI numbers and the unemployment numbers. The market didn't really like it that much. So, we could have a pullback here for a week or two in March. We talked about that weakness, and then maybe a final surge that finishes off this ascending wedge that we have here on this chart. I mean, this is a massive, massive ascending wedge, and you can rest assured that once we start breaking that bottom trend line of it, it's going to be a pretty swift move. So that's where you're going to look back on, a lot of our podcasts and say, yep, they were warning us, so just be prepared. We're not quite there yet. I don't think. I think we got one more last hurrah in this market, but we're getting close, very close.
Phil, that's a good warning, guys. Just start practicing your risk management here now. now. And when this worm turns, you're going to the only place you're really going to be safe is going to be cash and bonds, ironically, and that's exactly what the government wants. So I wouldn't fight them this time, just profit from it. With that, guys, check out our service, tradelikeagenius.com. We're helping people navigate this, and I think you'll be pleased with what we have to offer. Thanks, Phil. I'll catch you guys later.
See you guys later. Have a good one.
Trade Genius.